This is an accurate picture of all of us coming 6 p.m. today when futures open, following the quote-unquote trade war that Wall Street is now calling the tariff activities between the US and Canada. The last time we had a quote-unquote trade war was in fact in 2018, and the S&P fell about 20% before Trump backed off of the trade war with China. And if you guys are unaware of what has taken place over this weekend, Trump has announced a 25% tariff on Mexico, a 25% tariff on Canada, and a 10% tariff on China. We have not heard much about Mexico's response. They have vowed to respond in some way by tariffing us, but we have not heard anything yet. But Canada has already acted to enforce over $100 billion worth of tariffs on the US. Since these tariffs have been enacted, Trump says that pain from tariffs will be quote-unquote worth the price. Trump is calling for Canada to become the 51st US state once again. And Goldman Sachs says this morning, quote, "While the outlook is unclear, we think the Canada and Mexico focused tariffs are likely to be short-lived." Peter Burson on X says the problem with this view is that Trump won't change course unless the stock market sells off bigly. But the stock market won't sell off bigly if investors continue to think that tariffs will be lifted soon. Trump was recently asked by a reporter. The reporter said, "You promised Americans you would try to reduce cost." And Trump said, "Tariffs don't cause inflation. Tariffs cause success. There could be some temporary short-term disruption, and people understand that." Now, here in this video, I will explain what the real situation is with tariffs. No, they're not inflationary. If you think they're inflationary, I highly recommend that you listen closely to the next 5 or so minutes of this video. Because, yeah, the outcome will be the same for equities. Stocks will likely sell off, but not because of higher inflation. This will prompt the Fed to cut rates more than you expect, and certainly than Wall Street expects, because it's potentially going to be bad for the labor market. That's the real area that you should be watching. And we will also go over Tesla stock and implications for Tesla within this, because Canada did just tariff Tesla. Now, only about 2.5% of Tesla deliveries per year are in Canada. So it's not a hugely important market. And, well, there's a possible, there's a very likely scenario for Tesla in Canada. And I'll explain that here in this video. Now, first and foremost, it's important to understand that 77% of Canada's exports go to the US, and 84% of Mexico's exports go to the US. So both of them heavily rely on the United States. So Canada imposing a tariff is really just bad for Canada, right? Because, 77% of Canadian exports. So think about that. More than half, more than 3/4 of all of Canada's, external business comes to the US. So all those Canadian companies are now going to have to pay tariffs when they send out their product. Because the easiest way to think about this is tariffs are paid by the company, or by the company in that country. So when the US puts tariffs on Canada, well, that just means if you're a cup company, for an example, or a baby bottle pop company. I don't even know who is the actual maker of this. Bazooka. If you're Bazooka and you make your product in the US and you sell it to Canada or whatnot, you're gonna be the company that has to pay the tariff. So in all actuality, Canada and Mexico are in no position to actually go through a trade war with the US. So from that standpoint, there's a lot of people that think these tariffs are just going to go away. And I would say that Trump has delivered on his campaign promises so far. Deporting illegal immigrants, especially, criminals. That's happened. Getting tough on trade. That looks like it's happening right now. A lot of the promises made are being kept, at least up until now. I don't see a tariff going on and then a tariff just going off quickly like Goldman Sachs expects. Even Matt Gaetz, the guy that dropped out from being, I believe it was Secretary of State, or the treasurer, one of the two. He says, Canada won't win a trade war against the US. We can live without your sorry excuse for bacon. Now, I wrote this post on my X account. I said, here's why tariffs could crash the stock market, and it's not inflation. Let me explain. Inflation occurs when governments print money. When governments print money, people have more money to spend. In turn, consumers are willing to pay higher prices. Now, this is the simplified version, but essentially governments print money. It ends up in businesses. It ends up going out in wages. People spend more money, okay? That's essentially how inflation happens. Now, money supply is no longer increasing. After the last couple of years of inflation, consumers will not stand for price increases. If you are a tariff company and try to pass on the cost to consumers, they will buy less of your product. You can see this clearly with eggs recently. Eggs have skyrocketed. I'll bet my life savings on it. People are buying less eggs now than before. Now, eggs are a highly commoditized product, so it's a little bit different if you're comparing eggs to TVs, for an example. And there is kind of an argument to be made, like with toilet paper, for an example. Okay, if you are a premium toilet paper product and you charge more than your competition, you cannot, I repeat, you cannot go out and raise prices further and expect your demand to remain the same. That's just not how it works. If you're already charging more for other toilet papers and people are buying their, if your sales are pretty consistent, growing a little bit, whatever, average, business, you can't go out and raise prices further. What it could do, though, if you tried to raise prices, is really lead to people just trading down to less expensive, toilet paper, right? So your option is not raise prices. The option is for that premium toilet paper company to lay people off, to become more efficient internally in operations. So you can still pay the tariff, but you're not taking it in the margin because you're laying people off. You're becoming more efficient, so on and so forth. You could actually say this could be bullish for AI as well if that helps companies be more efficient. And now I say here, they're opting for cheaper protein instead, but with commoditized items, it's a little different, but again, the same idea. So if you're a company, you will be forced with really only two options. Number one, lay people off / cut costs elsewhere in the business. Or two, take the margin hit. Why? Well, if you raise prices and people revolt and buy less, well, you lose. If you don't raise prices but instead reduce headcount and become more efficient and potentially raise margins in the process, you win and keep costs lower for consumers. That's why tariffs are actually disinflationary. The real problem could be a weakening labor market, which unfortunately could be bad for economic activity and ultimately bad for the S&P. I say, good. I'm glad we are now on the same page. And it's interesting because Wall Street is under the impression that companies can just pass these costs on to consumers. And that's not the reality of Main Street right now. Go out there and talk to people. Go talk to lower middle income average people and ask them how they feel about price increases. Ask them if they're buying more eggs. And I know eggs are a very, dramatic thing to look at. But people respond to price increases. Doritos, for an example. Great example of this. Doritos raised prices a lot in the past couple of years. But look at Doritos sales. They suck. They're terrible. What Doritos had to do is heavily discount, essentially giving back a lot of those price increases that they did. Frito-Lay, Pepsi, right, company that owns Doritos and a lot of snack brands, has said, we cannot raise prices anymore. People will only pay $5 per bag of Doritos. And some people won't even pay that. Okay? That's why prices are not going up anymore on Doritos. They're at $5 a bag. What do you think Doritos is going to do with these tariffs? Well, they're going to have to take it in the margin, or they're going to have to reduce their staffing. They're going to have to, boost lower cost however they can. And it's not, they're not going to be able to raise prices on a lot of items. So that's the point I'm trying to make. Wall Street's going to be under this assumption that it's going to be inflationary, in which it will not be. It will be disinflationary. It will harm the labor market, which is ultimately bad for the S&P anyways. Like that's worse than a little bit of inflation, to have the labor market weaken in a dramatic way. And it will force the Fed to start reducing rates, probably in the next couple of months. Wall Street's going to realize, oh crap, tariffs are not inflationary. They're actually just bad for the economy. And that is potentially the opportunity you have in the heads up here. Because I guess stocks will crash either way, most likely, if it's presumed that a trade war is starting. I don't see an easy way out of this, as markets are near all-time highs. I think you have to get some pain here now in the markets. But ultimately, higher inflation's not going to be the outcome of this. It's going to be a weaker economy. Question is, does it push us into some kind of recession or not? Or does it just weaken GDP from, let's say, 2% to 1% or something along those lines? There's an argument for that, but we don't know exactly what that would look like. And you can see here from this article on CNBC, quote, "It doesn't have to be this way. Canada, Mexico, and China respond to Trump's tariffs." It says here, Mexico also vowed retaliation following news of the tariffs. Although President Claudia Sheinbaum did not reveal specifics, China, meanwhile, stopped short of an immediate escalation. Trump also did say if Canada retaliates against these tariffs, they could be boosted to 50%. So who knows what happens next. And Trump did say on Friday that he's not concerned about the market's reaction to tariffs. So he basically said, F your stocks. We're doing this regardless. And we will see if markets do throw a tantrum and stocks start to fall, how Trump responds to that. If they back down from the trade war, it doesn't seem likely to me at this point. I think at this point, these tariffs are probably going to stay on, but Trump's going to potentially demand other things as a negotiating tool to not raise the tariffs even further, because Canada and Mexico are handicapped to the U.S. The U.S. can do without especially Canadian goods. Mexico, that would be a little bit more difficult for certain industries. But the next round of proposed tariffs will be likely a negotiations tool. And it's also being reported by S&P that they estimate that the U.S. implementing a 25% tariff on Mexican exports would push the Mexican economy into a recession. The Canadian ambassador says Canadians expect our government to stand firm in trade dispute. They also said U.S. consumers should know retaliatory tariffs are not something Canada wants to do. And the Canadian ambassador says she is hopeful the Trump tariffs don't come into effect on Tuesday. Now, the Aluminum Association of Canada says Canada's aluminum industry finds unfortunate and highly disruptive the 25% tariffs announced by the U.S. administration. Now, you are already starting to see some of the effects from this. General Motors has dropped a production shift at an assembly plant that builds electric crossovers for Chevrolet, Cadillac, and Honda in Mexico. Ending the third shift will result in the elimination of about 800 jobs. So you're already starting to see the effect. And again, in retaliation to Trump's new tariffs, Canada is imposing a 25% tariff on $155 billion of US goods, which includes electric vehicles such as Teslas, which is most of the trade we do with Canada, essentially. Now, there's a lot of other items that as well will be tariffed, but it's pretty much everything. For anyone curious, about 2.6% of Tesla's annual vehicle deliveries are in Canada. So this does have some effect on Tesla, a lot less of an effect on Tesla than it would, you know, GM, Ford, or someone like that. But it still does have some effect. Now, some people say that Tesla could just ship the cars from China, and that would be a way of getting around them. But, you know, I don't think it's a huge deal, right? Tesla is minimally impacted. Tesla could try to raise prices in Canada. Could try that. But, you know, I don't really think the Canadian people want price increases either, although I can't vouch for the Canadian population if they would actually pay the higher prices or not. Now, in terms of a equity response to this, I don't think it matters if you're to some extent less tariffed than another company. I think it's going to have just a negative impact across the board for markets. Obviously, the companies that are highly impacted by this are going to likely sell off more. But even though Tesla is very minimally impacted by this, you know, I don't think that's going to save Tesla's stock. That's just my opinion. Tesla is sitting at a pretty critical level on a technical basis. On Friday, you were above your downtrending trend line, which was a great sign. When you get above this, you're going to be able to rally pretty aggressively. Now, I imagine coming tomorrow, Tesla is going to trade down below 400, likely into the 390s, 380s, maybe even 370s if tomorrow is really bad. The level of support you'd want to watch for is about 7% lower than where Tesla is today at about $377 per share. Really, I don't get concerned about this, about a larger sell-off for Tesla, unless you fall below 377. Then you start to make a series of lower lows, and that would be an issue. So far in this rally, we have not made any lower lows. We've been making lower highs, okay? So this could be a pretty critical week for Tesla. You can see option activity on Friday for Tesla was very positive. You had 211 different trades, totaling about $300 million with a positive order value of 84%. So that looks good. It looks like hedge funds, institutions were placing some bullish bets on Tesla on Friday. You did see almost 400,000 shares that were sold short on Friday. So that doesn't look as good from that perspective, but option activity good. Short sellers shorting a bit of Tesla stock though on Friday. Let me know what you think about all of this information down below in the comment section. In the next video at 8 p.m. today, we will be looking at futures, what's happening, if markets are crashing or not. I do have a feeling tomorrow's probably going to be a pretty ugly day for stocks. So we will discuss that, and in that video, it'll give us a little bit more information to go off of. I highly recommend that you guys watch that video, but unfortunately, I don't think these tariffs are just going to be lifted. Trump really didn't outline a way to lift these tariffs. I mean, to stop the flow of fentanyl is definitely not something that would happen anytime soon. And in a more worst case scenario, you're looking at Tesla down to that 100-day moving average at about $325 per share, and then down to that 200-day moving average at $262 per share. Although I don't think you're going to hit that lower level. If we did, I think it'd be a massive buying opportunity, and that's what I think we all should be prepared to do. You should be prepared to see Tesla stock, fall to $262 per share. You should be ready for that. And if you're not, you should get ready quickly, because you're going to see some incredible volatility, I believe, in markets because of this trade war situation. So again, let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.